Hi, welcome back to the channel. In today's episode, I want to talk to you about what's happening in the Russian economy and specifically what's going on with oil and gas revenues because they remain the single most important revenue line from Russia's perspective. Now, if you've been following the channel, you'll be aware that over the past few months, we've seen a real tightening of the sanctions, and this is really starting to impact on Russia's revenues. And in today's video, we'll have a look at the latest figures released for January. They've actually been released by the Ministry of Finance in Russia. So this is official data. This isn't me guessing what Russia is making. And we'll also have a look at what's going on with the Urals oil price because it's now fallen to a really low level. And this is going to have a devastating impact on Russia's budget for 2026 because in that budget, Russia assumed that it would sell its oil for $59 per barrel. And I can tell you that it's now being sold at a significant discount to $59. So if you have a look at this table, it shows lots of different data. So I thought I'd start off with what Russia was earning in January last year from its oil and gas sales. And as you can see, it was 1.12 trillion rubles, which sounds like a lot. It is a lot. And in US dollar terms, that was around $14.5 billion. That's in the month of January. If we now look at what's happened in November, so towards the end of 2025, that revenue had more than halved to 531 billion rubles, which, given the exchange rate at that time, was around 6.8 billion US dollars. So you can see the devastating impact that the sanctions have had. I get a lot of messages from people saying the sanctions aren't working, Russia's still going, it's a waste of time doing all of these sanctions. But you can see just from that 11-month difference what the impact has been on Russia's revenues. But unfortunately, it's getting worse. Now, if we have a look at what happened in December, revenue actually went up to 587 billion. You might be thinking, well, doesn't that prove that the sanctions aren't working? But you always have to look at the details as to what has caused that. And on the 21st of November, sanctions were applied against Rosneft and Lukoil, the two biggest oil companies in Russia. This was actually a groundbreaking move by Donald Trump. Up until that point, it was considered by the West that Russia actually was very important for the global supply of oil. And if they were taken out completely, that it would cause oil prices to spike. However, because OPEC Plus, which Russia is a member of, has been increasing the amount of oil that it's releasing into the markets over the past 18 months or so, the West took the view that actually there's enough oil kicking around. And also, Donald Trump was in the process of securing the Venezuelan oil supplies by removing Nicolas Maduro. So there was a number of different things happening that meant that Russian oil supplies aren't quite as important today as they were at the start of the war in Ukraine. As a result of that, sanctions were applied against Rosneft and Lukoil. Now, the impact of that in the December figures was actually to increase Russia's revenue because countries like India and China saw this as their last opportunity to place large orders with Rosneft and Lukoil. So that explains why there was an increase in December. It was basically a last-minute gasp to get that cheap deal before the door closed. You can see that revenue in December increased to 7.6 billion, which was a 10.6% increase versus November. However, in today's video, I want to talk about the January figures for 2026. And as you can see, revenue was 393.3 billion rubles, which is actually the lowest level since the COVID pandemic. So this is the lowest since the war in Ukraine started. So that really hammers home the point that the sanctions are working. Now, in US dollar terms, it's around 5.1 billion, which represents a fall against December of 33%. So that really shows you the impact of those direct sanctions against Lukoil and Rosneft. And also, the European Union on the 21st of January introduced an outright ban on the sale of any products that have been made using Russian crude. So up until this point, Chinese and Indian refineries were able to buy Russian crude make it into diesel and gasoline and jet fuel and kerosene, all those sort of things, and then sell it back to Europe because it's quite difficult to be able to prove where it was coming from. But now there is a focus on making sure that those refineries are not doing that. And if we look at the year-on-year change for the January figures, it's down by almost 65%. So that shows just how devastating the sanctions are. Now, just before we go any further today, could I ask anybody that hasn't subscribed yet to please hit that subscriber button? And I also wanted to say thank you so much to everyone that signed up as a member or a patron. If you do that, then you'll get early access to my videos, and you can also watch them advert-free on Patreon. It's not just the volume of oil and the amount of revenue that Russia is suffering from at the moment. It's also suffering from a very low sales price because it's having to offer deep discounts to India and China predominantly, and also Turkey, to try to persuade them to continue buying, even though if you're caught buying, then you would be caught by the secondary sanctions. So there's a big risk involved for Indian and Chinese buyers at the moment. And I thought it was worth having a look at where Urals oil is trading and how it compares to Brent crude. And then we'll go on to talk about what the impact on Russia's budget will be. So in November, Brent crude on average was trading for $63.8. Russian oil, referred to as Urals, was trading for $55. So that represents a discount of $8.80, which is around about 14%. So that's broadly speaking higher than it was 6 months ago. The discount had narrowed to around about 5 to 7% because it was okay to keep buying Russian oil. Now in December, Brent crude fell because the market prices came down to $65.5 per barrel. But Urals oil, as you can see, absolutely crashed to $39.18, which represented a discount of $23.36. And that's almost 37.5%. So you can see that compared to November, the discount widened hugely. Now, interestingly, in January, oil prices went up again, and this was partly down to concerns about what's happening with Iran and also Venezuela. So there's a lot of moving parts in terms of oil prices at the moment. They're going up and down all the time. So oil prices went up to $66.6. Urals oil increased to 40.6 because there was an increase in the global price of oil, so therefore Russian oil also goes up, broadly speaking. However, if you look at the discount, it increased to $26 per barrel. So that was an increase, and that represents a discount percentage of over 39%. So this is a nightmare from Russia's point of view because oil prices are actually higher today than they were in November. But if you look at Urals oil, it's not increased anywhere near as much. And the reason why I wanted to show this is because if we look at these prices of $55, $39, and $40, they are all significantly below the $59 that Russia included in its budget for 2026. That's what Russia assumed it would sell its oil for on average throughout the whole of the year. Now, obviously, that's not going to happen because these discounts are getting larger. So I thought it was worth having a look at what the impact on the Russian economy will be if Russia continues to sell its oil at those three rates. So if we firstly assume $55 per barrel, which was where it was selling in November, that's $4 less than the 59 in the budget. So on an annual basis, Russia would be down by over $6.5 billion. That's how much revenue it will lose if it continues selling its oil at $55 per barrel. So that would basically result in a $6.5 billion increase in the deficit. So the difference between how much Russia is spending and how much it's earning. So that would come out of the National Wealth Fund, or Russia would have to need to raise debt. But it's not selling its oil at $55 now. So if we have a look at what the impact would be at $39, which is where it was selling in December because oil prices came down, that's a $20 shortfall against the 59 in the budget. That would represent a $32.8 billion shortfall against the original budget. So that would basically need to come out of the National Wealth Fund or raise debt. Now, in January, it was selling at $40 per barrel, which is similar to the 39, but that's because oil prices rose generally. However, what we're now seeing also is that the sanctions are continuing to squeeze Russia. So there is no guarantee that it will continue selling at that sort of discount, because in January, the discount actually increased to $26. So we've seen a widening of the discount, and that could continue through February, March, April, May, June, and all of the months of 2026. But in addition to this, we're also seeing volume reductions because India and China are now pulling back from those purchases. India recently struck a deal with the USA whereby the tariff applied on Indian exports to the US, which is the biggest single market for India, so it's the most important. It represents around 20% of all of India's exports. They were reduced from the 50% imposed by Donald Trump because India was continuing to deal with Russia to 18%. And that's on the basis that India stops buying Russian oil. And if it does, then not only will Russia see a widening of its discounts, but it will also see a huge reduction in its volume of sales. And that volume reduction will have a massive impact on the deficit from Russia's perspective and mean that there'll be even more pressure on the National Wealth Fund, which is basically going to run dry at some point in 2026. It could be within the next few months if these conditions continue. So we are seeing a lot of pressure being applied on Russia right now. And these financials really tell us that the sanctions are having a huge impact. They are really hurting Russia's revenues and therefore Russia's economy. Now, Russia is currently selling gold to fund some of the deficit. And it will continue to do that because the price of gold is pretty high at the moment. So it's a good time to sell on average. However, you can only sell your crown jewels once. Once they've gone, they've gone. And so the Kremlin is currently depleting its wealth. It's dipping in to its rainy day savings fund. And the reason that it's doing that is to keep the war in Ukraine going. But it doesn't really make sense from a financial perspective. When you look at these figures, oil and gas is the lifeblood of the Russian economy. That's what Russia has been built upon. But the oil and gas industry is being devastated by these sanctions. It's having to sell its oil at very low prices, and it's also now struggling to be able to sell the volumes. And as we've talked about many times before, if Russia can't continue to move those volumes, if it can't find buyers, then at some point it will have to cut back on production because tankers are already filling up. There are currently tens of billions of dollars worth of oil floating around on the ocean looking for buyers from Russia's perspective. And at some point, it will have to stop pulling the oil out of the ground. And if it does that, that could have catastrophic consequences to those oil facilities in the future, because the last thing that you want to do is cap off all of your wells and then try to get them going again at some point in the future, because a lot of those facilities are in very cold areas of the world. So the last thing that Russia wants to do is to start fiddling around with the amount of oil that it's pulling out of the ground. So the overall summary of today's video is that the evidence that we're seeing from the revenue that's been posted by the Ministry of Finance from Russia proves that the sanctions are working. We have seen a huge fall in Russia's oil and gas revenues in January. It's now down to the lowest level since 2020, so well before the war in Ukraine started. That was the COVID-19 pandemic, when basically demand across the world fell for oil. So all oil-producing countries saw a huge dip in their revenues. So Russia is basically now at an all-time low. This is an absolute disaster, not just from a revenue perspective, but also for the Russian budget and the Russian oil industry. So hopefully you've enjoyed today's video, you found it useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Please subscribe to the channel if you haven't done so already. Don't forget, I'm currently running my competition whereby you can win my property located close to one of the best beaches in the UK, or a cash alternative prize. It's another way of funding the channel, so please get involved. You can scan the QR code on the screen now or click the link in the description below. Thank you so much to everyone that supported me in other ways. If you bought me a coffee or sent me a YouTube super thanks or signed up as a patron or a member, really appreciate that support. Thank you so much. And here's something to put a smile on your face.